This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia started fuel exports to Iran by rail this year for the first time after traditional buyers shunned trade with Moscow, according to 3 industry sources and exports data. Russia and Iran, both under Western sanctions, are forging closer ties in order to support their economies and to undermine Western sanctions which both Moscow and Tehran cast as unjustified. Western sanctions on Russian oil products over what Moscow calls its special military operation in Ukraine have reshaped global fuel markets, with tankers taking longer routes and suppliers choosing exotic destinations and ways of transportation. Iran has been under Western sanctions for years with limited access to global markets.
Political pressure is building within the European Union to tackle the daunting challenge of closing a loophole in its efforts to stop using Russian fossil fuels, liquefied natural gas, LNG. In the year since Russia's February 2022 invasion of Ukraine, the EU has placed sanctions on seaborne oil and coal imports from Russia. It has drastically cut reliance on Russian pipeline gas, despite not imposing sanctions on the fuel. But at the same time, EU countries have increased their overall purchases of Russian LNG, undermining the bloc's pledge to end its use of Russian fossil fuels by 2027.
Moving on to the top news in the energy sector.
Non-OPEC countries will account for a higher percentage of oil production gains this year and next, a reversal of the last 2 years, the U.S. Energy Information Administration predicted on Tuesday. Gains by the US, Brazil, Canada and Guyana will overshadow OPEC after Saudi Arabia and other Middle East producers this month disclosed plans to cut output by around 1.16 million barrels per day beginning next month. Total non-OPEC liquid fuels production is expected to grow by 1.9 million barrels per day, BPD, in 2023 and by 1 million barrel of oil per day in 2024, the IEA said in its short-term energy outlook. OPEC output will fall by 500,000 barrels of oil per day in 2023, then rise by 1 million barrel of oil per day in 2024, after the group's output agreement expires, IEA forecast.
Italy gave conditional approval on Tuesday to the sale of the Lukoil-owned refinery in Sicily to Cypriot private equity firm GOI Energy. People familiar with the matter told Reuters. The government has the power to review the transaction under a golden power regulation designed to shield industries deemed of strategic importance in sectors such as banking, energy, telecoms and health. The ISAB plant owned by Russia's Lukoil refines 320,000 barrels of crude per day, accounting for a fifth of Italy's refining capacity, and directly employs about 1,000 people in an economically depressed area in the country's southernmost region. Next, we have the top news in metal markets. The share of Russian aluminium stocks in warehouses registered with the London Metal Exchange, LME, climbed to 53% of the total in March, or 220,575 tons, from 41% in January. Data on the exchange's website showed on Tuesday. The data suggests that consumers in industries ranging from transport to construction and packaging continue to shun Russian metal. Companies in Europe and in some parts of Asia do not want Russian aluminium. They may have contracts so they will take it, but they will not use it and instead deliver it to the LME, an aluminium industry source told Reuters.
An exclusive deal that will lead to the development and marketing of indices for Indonesian nickel, signed by UK-based Global Commodities Holdings Limited, GCHL, could change the landscape for referencing nickel prices, industry sources say. Since last March, when the London Metal Exchange, LME, suspended nickel trading for more than a week after prices erupted in a record-breaking surge, many consumers, producers and traders have been looking for an alternative. UK-based GCHL said in a release the indices would be used by all stakeholders as a reference for transactions, budgeting, forecasting and as a tool for the Indonesian government to control and monitor nickel mines and downstream activities.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures extended early losses on Wednesday after closing at a one-week peak in the previous session, with weak April exports and forecasts of higher output weighing on market sentiment. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange slid 58 ringgit, or 1.49%, to 3,830 ringgit, $867.89, a ton by the midday break after two straight sessions of gains. Prices slumped after the Southern Peninsula Palm Oil Millers Association, SPPOMA, reported a 35% monthly rise in production during the first 10 days of April, said Paramalingam Supramaniam, director at Selangor-based brokerage Pelinding Bestari. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.